Now let's get right into it, David. Now, similar situation that we're seeing this week as last week, where the market sort of started on a bearish note and then picked up during the course of the week. Do you think this is what we're going to see this week again?
It's not unlikely, because the market makers are fully alive to their duties and responsibilities, and if the market starts to show signs of weakness, it's expected that the market makers will come in to stabilize the market, and that precisely was what happened last week when the market went into a bearish state. And later on in the week, the market makers moved in powerfully, injecting cash liquidity into the market. And so the market was actually firmed up last week. It's not unlikely that we're going to experience the same thing today. Uche, I hope you are still hearing me.
Yes, I can still hear you, David.
It's not unlikely that the market will experience the same trend this week, considering the fact that it has started very slowly. I hope you are hearing me, Uche.
Yes, I can hear you, David. Go
ahead. I hope contact has not been lost, Uche.
No, I can still hear you, David. Can
because
you hear
I'm
me?
not hearing any audio from your end. But if you are still hearing me, perhaps let me continue my response to your question. Notwithstanding that contact has possibly been lost, I was actually saying that last week the market makers moved in. It's also expected that this week, I hope it has been restored, Uche. I hope communication has been restored now.
Yes, you may be right. Looks like the link seems to be having a bit of a problem there. David, can you hear me?
Yes, I can hear you very clearly now.
Great,
perhaps let me continue with my response.
You know what, David, let's just go ahead looking at how the market performed today. Now, what is driving performance for you, especially with all Q3 results? Pretty much all of them are out right now. What do you think is driving performance on the market currently?
Yeah, essentially, we are in the fourth quarter of the year, where traditionally the trend is for the market to slow down. It's not expected that there will be any price-sensitive information that can fundamentally drive the market. And so, topically, we are going to see forces of supply and demand ruling the market and setting the direction. And that precisely is what may have started with the market slowing down today.
Right.
Last week it slowed down until the market makers moved in, because right now, in the absence of any fundamental information to drive the market, we will have a normal pattern of supply without commensurate level of demand. And so we see the market declining this last quarter. I think analysts have actually looked at the trend and discovered that the market ends the second half of the year a little weaker than the first half of the year.
Well, David, I mean, I think one of the stocks that is a great example of this is Nestle. I mean, that was a stock that we thought was going to hit that 700 naira mark and probably exceeded. But I mean, that stock continues to go down. In fact, as of today, it's actually at 629 naira and 50 kobo. What's your take on what we're seeing with Nestle specifically?
Yes, it almost escaped my memory that along the line when the market was at its full gear on a rally, some of those high cap stocks were actually driven beyond their fundamental values. Indeed, they became severely overheated. And so we are now seeing a measure of correction occurring with those high cap multinational stocks. And a typical example is Nestle PLC. At a point, Nestle became severely overheated. It threatened to bust the 700 naira point until eventually, I think, investors began to understand that that security was overheated. And so a measure of correction is actually taking place with that stock, together with some other multinational stocks that had actually been driven beyond their fundamental values. And so we are seeing a measure of correction there.
Right,
know. So the correction will occur up to a point where value will be restored again in those securities. But however, the decline in the demand for some of the banking stocks like First Bank and GT Bank that declined today could be attributed to market forces,
right?
And nothing more really than market forces.
Okay.
Otherwise,
well, I mean, David, with all this,
yes.
then what is your outlook? I mean, for the course of this week, and certainly for Q4 as a whole, how do you see what direction do you see the market going?
I don't think market makers will allow the all-share index decline below 26,000 points. So I believe they will make very frantic efforts to stabilize the market at an dynamic equilibrium region of 26,000 points. So it's actually going to rest on the market makers, because I don't see any price sensitive information from the angle of the fundamentals that can drive the market into any rally, beyond what we have witnessed in the past. But however, perhaps as we move gradually to the end of the year, we can see positioning for the first quarter of the year.